We are looking at a Euro US dollar 60-minute chart, and first we'll just draw out a couple characteristics on this chart. We had this double top high, failed to make a high above the previous day's high, quickly rejected, and just sort of moving down the chart a little bit. We see levels of support that become resistance, and we are trading in these ranges here. And if you see this one here, okay, you see this level of resistance here becomes support and so forth, and then price rallies, it retraces from this high, it retraces. This doesn't quite come back. 38% would be good if it did, and this is the 10-day moving average. Looking back in time, we see that this is a distinct level. Price moved down here close to these lows, not the spike low. Now what we're looking at is price consolidated, waiting on an economic report. Then we moved up beyond the 162% extension. Price settled above the previous highs, and now we are moving higher. As we watch, we have our trend line here, and we are watching price. This is a Friday. This was a non-farm payrolls event, by the way, and we have a Friday. As price moves up on the open of the Sunday, we have price making a high, and now we are getting into we're still in our Sunday session, fourth. Let me see, fourth, 6-5 Sunday session. Now we see the price come up here. Let's just go back here for a moment. You see this high here where price during a low liquidity time bounced off of this high right here. You should know where this high is. As price rallies here and makes new highs that we can't see on this 60-minute chart, then what you do is you move to your higher time frames. And let's move to our 4-hour time frame. And this is where that economic report occurred. I'm sorry, here, the economic report. And we're now making higher highs, but we see this high right here at 129.70. That is our key high, is 129.70. And look what happens at 129.70. We reach a high of 76, and it is quickly rejected from a high of 76 to a low of 47, 30 pips in this 4-hour bounce here. Let's go back to the 60-minute chart. This is what the bounce looks like on a 60-minute chart. Now what we'll do on this 60-minute chart is we'll compress it to show you where that bounce came from. Can't quite see all the data, but there's your high right there. 72, that's a 72 there, and 76 there. 4 pips difference. So this is our bounce. We could see, let me show you as well on the 4-hour chart, going back to the, you see we're in this consolidation here. If we don't make it through these highs, then we're going back into consolidation. Our level of resistance is around here. We could move back to this level of resistance and then bounce up, but if this high holds, we could see a large move back into the range and maybe even beyond the range. Let's have a look to see what that bounce looks like on a 15-minute chart. Here's our consolidation leading into the non-farm payrolls economic report. Here's the bounce. Here's the consolidation into the weekend. Here's our weekend. Now starting a new day. We see this is what the spike looked like. It was during very illiquid trading. The spike to the high to fill the number. It's amazing how it's just amazing. And this happens at the open of the Central European session on the Monday. And price, look at how price moves from 40 to 76, spikes up, bounces at the high, and rejects very early in the European session, pulling the flows towards the highs, getting their fills with the intention or possibility of driving price down. We come back up and test. Slowly drifts down, making you doubtful that this high is going to hold. And back to our 60-minute chart. There's the retest and the fall. Now this is this vertical line moves us into the Asian session. As we see a base of support holding here. As this base of support holds, let's just move back one. We have a potential confirmation of the reversal formation setting up here. From the last swing high to the low, this is kind of what I'd call sort of the minor swing. The major swing would be up here, this high right here. Let's just look at the minor swing. We have right here, I would say this would be I would consider this to be a neckline here. Price comes through and forms actually the neckline. It would look kind of, you can kind of draw the neckline a little bit more like this. That's kind of because this is the base of the neck over here. Let's pull that out of there. So that would be the base of the neck there. And now what we're looking for is, you see this level of support here at 29.20. We see a support resistance level right here at or about the 62% retracement. You see this resistance becomes support here, right at about the 62% retracement. Here we have our high, our low, our retracement 38, 50, 62. These lines are really close together. So in this type of scenario, you want to trade it potentially between the 38 and the 62 if possible, because they're so close together. Now if we look at the bigger swing, the line converges more with the 50. So we're really looking at, on the bigger swing, I would trade it with a stop above the 79% retracement or above the high. So the higher price retraces, if this reversal is to come to fruition, the higher price retraces, the better fill I can get and the tighter my stop can be. So this is 29.40 is a 62% retracement. 29.56, so they're 15 pips away, and this is 72, so you can have a 40 pip stop from here or a 25 or 30 pip stop if your stop is just above here. So 40 pips, 30 to 35 pip stop with an entry somewhere around here. That way, if price keeps going, then if our stop is here, it's obviously narrower, as opposed to trading it down here. Remember, this high is a significant high, and this could be a reversal formation that's setting up here. If you didn't get in at the top here, then we're looking for a second chance to get in if this reversal formation is to hold. Now we come up to the 50% retracement. We spike up, and on the smaller swing, it comes right up to the 62% retracement and the level of resistance and support. So your fill would be 29, let's say 29.30, with a stop up here at either 29, I would put it at either 29.55 with a fill at 30, or 75, 55 or 75. For a 25 or 45 pip stop, depending on your equity. It should be a percentage of your equity, not by pips. Now, let's do one more thing. Let's see where our pivot points line up in relation to this scenario. Price is bouncing right at about the central pivot for the day, which converges with, well, between the 38 and the 62. Again, because this is a small swing here. That way we have the narrow lines between the 38 and the 62. We'll take that off of there because the looks kind of busy. Now price is falling. You want to, when you trade this, you want to take your profit before it gets to this low, your first profit, because it may not get past the low. You see how it bounced here? It may not move past the low. It may consolidate. It's important to take your first profit here. Now we're at the 162% extension and this level of resistance and the 10-day moving average, and it bounces here. And we see a slowing at the extension, support resistance, and 10-day moving average. You should take 60 to 90% of your profit before the first level of support, then start to scale down from there depending on how much position you have left over. Looking at this on a 15-minute chart now. Here's our high. There's the retest of the high. And the swing low. Forming a base of support. We will get a close-up of our Fibonacci levels here. Still have not formed support yet. Giving us a close-up of our Fibonacci levels and what price would have looked like if you were seeing it in real time. As liquidity picked up in the early European session, we saw price moving towards. Here's our level of support here. Let's have a closer look. Here's a distinct level of support and resistance above the 62 at 40. And there's one, I'd look at it, I'd say, well, there's one right around here. You can kind of put it anywhere in or about this area. We had it at 30. And here's our bounce at the 62% retracement, support and resistance. See how price moved through support, bounced at the 127% extension, bounced at the 162% extension, now the 10-day moving average, and our levels of support that we saw on the 1-hour chart. A total move from entry 29.20 to 28.20, pretty well without looking back. Pretty steady move down of 100 pips. The trick is in the entry, right? The key is in the entry and identifying. Remember, we've got the force or the power from this. Let's go to the 4-hour chart. It's important to talk about this. This is power. This distinct high in the high of this range and price rejecting here at this distinct high, this is power into the market. It's force, it's energy into the market, because there's been a distinct decision by traders, by the major flows, not to exceed these levels, not to go after 130. And the strength of this move, look at the power behind this move if you're trading. And look, we go all the way to the base of consolidation and through the base of consolidation down to 2640. 300 pip in all, pretty well without looking back. If you managed your trade effectively, you could still be in this trade, and I think that we're still even going lower, but you could still be in this trade. And there's just a summary of how to walk through one of these types of scenarios where you have these distinct highs. Keep an eye on your important levels on the 4-hour chart, and then you refine your trade on the smaller time frames and look for the reversal patterns on the smaller time frames.